Now we're going to turn our attention to Europe because Europe remains an interesting spot, especially as we get some of the data points. There's pressure heading into the ECB meeting on December 10th. And there's a lot to really kind of pick apart as to what to look at and what to focus on as we head into the new year. And before we get into that, I'd please like to remind you, like, share, subscribe. Your support is appreciated. So here, when we look at, again, the tale of two cities between manufacturing and services, when we look at the top piece, you can see that manufacturing disappointed in France, and obviously services. Germany had a nice surprise on the manufacturing side. That didn't not a surprise to the downside on a surprise to the downside on services. But when we look at the Eurozone, so the Eurozone manufacturing was 53.6. Again, this is a little bit of a look back versus where COVID is now. And then when we look at services, it missed to the downside, 41.3. So the Eurozone composite was 45.1. So we have another contraction. We have more pressure to the downside. And this is as, again, debt is rising, stimulus is rising. You have all of these things being done to try to pick up the economy, and yet the euro continues to rally, with the euro now sitting at $1.19. This is going to be a problem as Lagarde goes into the ECB meeting, into what the plans are on December 10th, which is a Thursday. And it's going to be how do they kind of right this ship? How do they get things to get a little bit better? And you have a tale of two cities. France has been very weak. Germany has been fairly strong. Well, let's look at German data. So private consumption, surprise to the upside. Government spending, fairly moderate. Capital investment, surprise to the downside. GDP, when we look at the GDP numbers, they were, fairly better than expected. When we look at the year over year, down only 4%. The expectation was down 4.3%. These are some benefits. And then when we look at business climate, fairly flat versus expectations. Expectations going forward have weakened a little bit, where the expectations were for 93.5, came in at 91.5. Current assessment is fairly flat. The issue is now, what is going to be the difference between Germany and the rest of the European Union? And that's where we're seeing this disconnect, because France has gotten worse, starting to get a little bit better as lockdowns expire. Italy remains weak. Spain remains weak. So they're essentially riding the coattails of Germany in terms of this strength. And with an elevated euro, it's very hard to incentivize exports when your exports are expensive, because other people's currencies continue to weaken and weaken against the euro. So it's more expensive to buy from Europe. And these are going to be issues as we go forward in terms of what is going to happen. How is this going to normalize? And I think that December 10th meeting is going to be a pivotal moment for what do things look like on going into the end of the year, but not only into the end of the year, but also into 2021. And this is something to consider, because yet we had a pretty big increase going into the UK PMI, but this is also, British exit is coming, and it's happening now. And here you see people storing up. There has been a significant amount of hoarding, inventory builds, and whatnot, just to try to bridge some of this gap. We've already had announcements of facility closures, of all types of reductions, because there is going to be an impact to the UK business cycle, because the EU has denied all types of free trade agreements, and there's a lot of stipulations in the free trade agreements that Japan and other Asian nations can't give undue benefits to someone else within the same region, which is why the UK has been denied a significant amount of these benefits. So again, there's going to be this hard stop, which is going to create a significant headwind to the UK economy. And that's why they're trying to, and corporations are always going to try to get in front of this. And this is what they've been doing to try to build up storage, come up with ways to have this backdrop, and then trying to work out their own agreements to try to keep some of this flow going as we come to the other side of British exit. And that's why when we look at, okay, now that we have the UK, well, this isn't just going to impact the UK. This is also going to impact the European zone. And what is happening right now? So when we look at consumer confidence is well below where retail sales are. And if you look at how things normally react, it's going to act as like as a weight. Now, again, retail sales are real. Consumer confidence is how you feel. It's not so much. They don't have to marry. They don't have to match. But it's just showing you that the trend is going to be down, which is again putting more pressure on the European Union, the Eurozone, similar something into the UK. And this is going to be a huge overhang for GDP growth when we look at the consumer and what the consumer is willing to tolerate as unemployment remains elevated, as all of these benefits continue to be a problem and will remain through the end of the year. And that's looking at GDP growth. So what are the expectations in terms of cumulative growth rates over the last 3 quarters, seasonally adjusted? UK, 9.7%. Germany is, I think, the bigger one in terms to look at, because the European Union's down about, let's call it 4.3%. But OECD total is at the same number. Again, like this is why we continue to struggle with the growth, because this doesn't just reverse overnight. This is something that's going to take time, like turning an aircraft carrier. And once it's headed in the right direction, it's going to take a long time to turn the other way. And this is why it's important to look at these data points, because the consumer, the jobs, the investments is going to be a big overhang in this backdrop. Specifically, the U.S., Japan, Germany, 3 out of 5 of the largest economies in the world, which is going to be a big overhang for not only global trade, but also global growth. And just to kind of round out the commentary on just COVID debt in general, as we talked about in the U.S., the debt levels, well, this is looking at the Eurozone private and public debt. And how much did it grow in the first half of 2020? You can see the percentage. France is almost at 50%. Belgium is at 40%. Spain, all of these levels of debt have to be, it's just going to be a big overhang for growth. It's going to increase interest expense. And some of it is issued at negative debt, negative interest rates. So that creates its a whole conundrum. But again, it's a matter of you're pulling forward a certain amount of growth to this point in time. And there's going to be a lot of problems. There's going to be a lot of fears. And that's why when we look at the growth profile, this is the overhang that we continue to point to, continue to see, because this debt has to be rolled. It has to be rolled at what interest rate? How is the interest rates going to continue to go down? Is Lagarde going to try to do something where it'll push the euro down, but will send interest rates higher? Like, there's a lot of things that we don't really know and how things will react, because Germany has been the stalwart and people have been borrowing against their credit. If you look at Greece and Spain, but at some point that has to adjust. And I think we're getting closer to this rate shock, if you will. And it doesn't have to be big. It's just something where the concerns will mount to the point where, look, I'm not willing to accept a negative rate. You're going to have to give me some positive carry. And that's going to have a bigger impact in terms of what they look like going forward, not just next year, but really over the next 5 years. And then what is the domino effect from Turkey and other areas, which we've covered on a geopolitical side. And these are going to be a lot of problems that they kicked the can in 2011, they kicked it again in 2014. And, the saying goes, the foot is strong, the can is light until you're kicking it in front of a brick wall. And the question is, how close to that brick wall are we? And will we start to see the issues that we've been talking about and discussing for years really start to take shape, take hold, and create the issues that have been talked about for years, really starting to happen now?